Hello, dear job aspirants. Our Career Connects channel always encourages the job aspirants to grow in a private limited or big corporate sector so that the growth will be much faster than any other government jobs. Here are the few questions that you can read just 10 minutes before an interview and improve your chances of getting success in the interview process. These are the questions asked previously in various private limited companies at Hyderabad and a number of MNCs and corporate companies in Hyderabad, Bangalore, and Chennai. So those questions were collected, and even my personal experience also. So you can expect these questions if you are having 0 to 5 years experience and apply for those kind of jobs. Here you go. What is an accounting? Accounting is the systematic recording, reporting, and analysis of financial transactions of a business. This is the language of business in order to convey the financial information about the company or business to various stakeholders. Second question. What is an accounting period? Accounting period refers to the length of the time covered by financial statements. That can be a quarter, year, or fiscal year covering a period of 12 months. What are the accounting principles? Accounting principles are the rules or guidelines adopted by the accounting profession to help in recording and reporting the affairs of a business. They are classified as accounting concepts and accounting conventions. Accounting concepts helps to record the transactions and accounting conventions helps to report the financial statements. What are the various accounting concepts? Accounting concepts are dual aspect concept, money measurement concept, cash or accrual, business entity, revenue recognition, periodicity concept, and finally, going concern concept. What are the various accounting conventions? Accounting conventions are four. They are consistency, conservatism, materiality, and disclosure. What is the concept of accrual? Accrual concept is the revenues and expenses are recognized as they are and are incurred irrespective of whether the cash is paid or received or not. Accounts are booked when they become due, but not based on actual payment or receipt. What is the difference between accrual accounting and cash basis accounting? In accrual accounting, all revenues and expenses are recognized as they are earned or incurred irrespective of whether the cash paid or received or not. Accounts are booked when they become due, but not based on actual payment or receipt. Here, the period is important. What are the debits and credits or expenses and receipts pertaining to one particular period will be booked under accrual system. Whereas in cash basis accounting, it's all about recognizing revenues and expenses when they are received or paid, irrespective of the period that belongs to. Accrual accounting presents true and fair view of the company's financial position. Tell me about money measurement concept. As per this concept, transactions and events which can be measured in monetary terms are only recorded in the books of accounts. Transactions, even if they affect the results of the business materially, cannot be recorded if they are not convertible in monetary terms. This is what money measurement concept. For example, employees are the assets of the company, but their measurement is in monetary terms is not possible. So therefore cannot be recorded in the books of accounts. What is the dual aspect concept in accounting? This concept is the core of double entry bookkeeping. According to this concept, every transaction or event has twofold effect. That's both debit and credit, means every transaction has impact on both assets and liabilities side of the balance sheet. Every transaction either increases or decreases an asset on one hand, on the other hand it increases or decreases the liability. Sometimes it affects on one side, asset side increases one asset and decreases one asset, and on the other side increases one liability and decreases another liability. That possibility is also there in the dual aspect concept. Hope you got this point. What is the realization concept in accounting? This concept follows the cost concept. Any change in the value of an asset is to be recorded only when it is realized by the business. Books to be recorded when there is an anticipation of decrease in the value of an asset, but not in the case of any increase in its value. Economists say that this concept makes accounting meaningless because it loses providing the right data. What is the going concern concept in accounting? As per this concept, the financial statements of any business are normally prepared on the assumption that the business entity will continue its operations for the foreseeable future. It is assumed that the business entity has neither the intention nor the need to liquidate or close its operations. For example, assets are booked at historical value based on this concept. So these are the questions, friends, you can expect when you are applying for a job 0 to 5 years experience. These are very important questions, all these 15 questions. So what is an accounting equation? Accounting equation is very important to prepare all ledger books, trial balance and financial statements. Accounting equation is assets is equal to liabilities plus capital, means every transaction affects both sides of the above equation. What is an opportunity cost? Opportunity cost is the value of an alternative strategy or resource foregone by adopting a particular strategy or employing a resource in a specific condition. It is a return expected from an investment other than the adopted one. These refers to costs which result from the use or application of material, labor and other facilities in a particular condition which have been foregone due to not using the alternative material, labor and facilities. What is marginal costing? Marginal costing is based on system of classification of costs into fixed and variable costs. Fixed costs are not the fixed costs are not to be considered in marginal costing system. Fixed cost means rent, salaries, etc., which are fixed every month. Only variable costs to be considered in marginal costing, and also inventory of work in progress and completed stock in determining the cost of product. In this system, business can find out what is the marginal cost that business should meet to survive, on the point where there is no profit and no loss. What is the difference between cost control and cost reduction? Cost control is a step by step approach or technique that apply to reach the target cost. Cost reduction is an achievement of reduction in costs. Cost control is a proactive approach. Cost reduction is a kind of corrective action. Cost reduction is achieved through cost control techniques such as Lean and Six Sigma. So, final question, 15th question. What are the various costs that can be traced in an organization? So, this I myself faced in Shell organization Chennai. Various costs that are noticed in an organization are material costs, labor costs, overheads, production costs, administrative costs, R&D costs, and selling and distribution costs. Hope you find this video useful, as this video is prepared by collecting most common questions and answers to better up your chances of winning at interview process. Or don't forget to hit like button. Please subscribe to this channel for more such videos. Don't forget to share this video with your friends who are attending an interview. I always encourage you to make your comments and suggestions in the comment section below. Thank you.